Hello friends, let's start with today's investor. The investor has written a very big email, but a very good email. I will not be able to go into the entire details, so we'll just cover the important points. So investor is 35-year-old and his horizon is 15 to 20 years. He started investing in January 2022 and currently he has 26 stocks in his portfolio and he will be doing a SIP of 25k per month. And he has asked 3 questions. One is asking me to review the portfolio, which we will do. Then second question is how many stock he should have in the portfolio. This question also I will try to answer in the video. And his third question is the most important question, which is how okay is it to book losses once you have realized that you have made a mistake. And he is asking this since this is his first time, and he has also asked that on which stock he should book losses. This part also we will discuss during the video. However, on the last part where you have asked me to tell you the stocks, this I will leave it completely on you. I will just share my point of view on the shares and then you can decide on which share you want to book losses or if you want to hold those shares. So let's start. Total invested amount is 4,76,000 and current value is 4,39,000. Currently there is a loss of 36,000, which is 7.64%, and the number of holding are 26. First company is Pidilite Industry. Invested amount is 22,000. Currently there is a profit of 2%. This is a very good company, a leader in the adhesive and sealant sector, and this company holds 70% market share in the adhesive segment. A very good company, a company which has created its own kind of monopoly in the adhesive segment. You can definitely continue with this. It has a very good management. The business also is very good. You can stay invested in this company, and whenever you get opportunity, you can add more capital to this company. Next company is Power Grid. Number of quantity is 50. Invested amount is 10,000 rupees. Currently there is a profit of close to 7%. Now I'm at the chart for Power Grid, and if I look at 5-year return for this company has just provided 48% return in the period of 5 years. And if I look at maximum return for this company, you can see the maximum return has been just 184%. And with the chart pattern, you can make out that this company is not doing very well in terms of providing returns to the shareholders. And the reason for that is that this company belongs to the power sector. It is into the business of transmission of power, which is governed by a lot of regulations and policy. And one more important factor is that this is a PSU. PSU companies, PSU banks will hardly give you good returns. They might be able to give you good dividend, but I'm sure in this portfolio your target is not to get dividend, your target is to get more capital gain. And sometimes there are companies also which provide you good dividend, but then it eats up your invested amount. For example, companies like Coal India. So if I would have been you, I would have avoided this sector and would have invested this amount in some other sector, in some other company. Next company is Supreme Industry. Number of quantity is 2. Invested amount is 3,700 and currently there is a profit of 34%. This is a good company in the plastic sector. It has provided consistent returns to its shareholder. The amount that you have invested is very low. That's why even after getting 34% return, you're just getting a profit of 1,200. And this is the problem you face when you have too many companies in your portfolio. But let's leave that topic for now. We will cover that at the end of the video. Next company is Tata Power. Invested quantity is 272. Invested amount is 63,000 rupees. Currently there is a loss of 13%. Now for this company there are two problems. One is that the allocation amount is very high considering the size of your portfolio. The allocation amount is more than 10%. So this is one rule which you guys can follow, which is that the allocation to any company in your portfolio should not be more than 10%. Because then you are overexposing your portfolio to one company. You will not get the benefit of the diversification. For example, in this case, over allocation is there, and since this company is down by 13%, this will have an impact on the overall portfolio also. Now coming to the company again is from the power sector. But right now the company is changing itself and moving from non-renewable source of energy to renewable sources of energy. So earlier it used to use coal to generate power, but now it is moving into solar power and things like that. So company is completely changing its focus. So there is a possibility that this company may do well in future. If you want, you can stay invested in this company, but I would advise not to keep the allocation to maximum 10%. You can give the allocation to close to 5% of your portfolio to this company. Next company is TCS. Quantity is 8, invested amount is 25,000. Currently there is a profit of 7%. This is a great company to have in the portfolio. This will provide you stable return and will also keep your portfolio stable. This is a consistent compounder company. This is a company where you can also do buy on dips. Whenever this company is down and you get a good discount, you should invest in this company. And the future of this industry is also very bright. This is a IT sector and the demand for IT is not going to go down in future. It is only and only going to increase in the future. So a good company, you can definitely keep this in your portfolio. And to companies like TCS, you can easily give 10% of your portfolio. Next company is Trident. Number of quantity is 100. Invested amount is 6,060 and currently there is a loss of 50%. Now I'm at the chart for Trident, and if I look at 5-year return, it has provided very good return in the period of 5 years. This company became very popular among the retail investor because it was providing very good upside when there was a bull market. But the problem with these type of company is you don't know when the next upside will come. There is a possibility that it may stay at the same level for next 4, 5 or even 10 years. And there is possibility also that maybe it will provide another upside in next 2 years. So you can never be sure in these type of company. And from last 2 quarters, the sales of the company has also started declining. So if I were you, I would have avoided this company, and the invested amount is also not that high, which is just 6,000. So you can take the call what you want to do in this. You want to hold this company for next 5-10 years, or you want to book your losses and invest the remaining amount that you'll get in some other company. Next company is ICICI General Insurance. Number of quantity is 5, invested amount is 5,700, and currently there is a loss of 1%. This is a good company from the insurance sector. If you want, you can hold this company, and if you want, you can also increase your allocation in this company. This company belongs to a sector which is still very under penetrated in India. So there is a possibility that in next 5-10 years, insurance sector can perform very well. Next company is Idea, which is giving wrong ideas to its shareholders. Invested quantity is 4,000, invested amount is 52,000. Currently there is a loss of 50%. Now I'm at the chart for Vodafone Idea, and if I look at maximum chart pattern, you can see that it is not a chart pattern of a good company. The chart pattern of a good company will be going from bottom left to top right, as I mentioned in all my videos. This is a chart pattern which is completely opposite, which is going like this. So if you would have used this checkpoint before investing in a company, you could have avoided this company and you could have avoided the losses also. But now the damage is already done. From this point, we can only hope that you recover your amount and you get your invested amount back, because there is no strength in the business of the company. Now I'm at the yearly numbers for Vodafone, and you can see that company is not generating profit at all. From last few years, company is only reporting losses. So there is actually no point in investing in a company which is not even able to generate profit. You should always stay away from these type of company. But I know these kind of mistakes do happen in the beginning, because in the starting we don't know what we need to check before investing in a company, and we fall into the trap of greed. We fall into the trap of lower share price, thinking that the price of the share will increase and thinking the company will revive. But 98 to 99% of the time that does not happen. So in this case, my friend, you will have to take the call whether you want to book losses or you want to hold this company and wait for this company to bounce back and give you at least some portion of your invested amount. Next company is IDFC First Bank. Total quantity is 480 and invested amount is 20,000 rupees. Currently there is a profit of 31%. This is a okay bank. If you want, you can keep it in your portfolio. But I would have first invested in a market leader bank in this case, which is SDFC, and then I would have thought of investing in some small and mid-sized bank. But that also I would have done only when the small or mid-sized bank is performing better than the leader bank and generating more profit, and it is growing its percentage better than the leader bank. So you can do a comparison between the profit growth between SDFC and IDFC bank and then take a call. Or as I said, you can also stay with this company. Nothing wrong with this company also. Next company is IEX. Invested amount is 25,000. Number of quantity is 119, and currently there is a loss of 38%. This company also somewhat related to the power sector. It is into the energy exchange business in India. This also has the same story which Power Grid has, that it provided a good run up during that bull run. But now this company from last few quarters is showing a decline in the sales number. If you have conviction on company's business, then you should stay invested in the company. Otherwise, whenever in doubt, you should get out. Whenever you have a doubt on company's performance, company's business, company's management, you should get out of that company. Next company is ITC. Quantity is 2. Invested amount is 560. Currently there is a profit of 23%. For this company also, this has not provided consistent return. In terms of providing dividend, it has provided very good dividend, and in the last year it has provided a good run up. But if you look at longer period return, this company is also not providing very consistent return. So I would have avoided this company. If at all you want to invest in an FMCG company, you can look at VBL, you can look at Nestle, you can also look at HUL. HUL and Nestle will provide you return in the range of 14 to 18%. If you want a FMCG company which can provide you better return than those, then you can look at Tata Consumers or VBL. Next company is KPIT Tech. Invested amount is 15,000 and quantity is 27. Currently there is a profit of 19%. This is a good company. You can continue with this company. The profit of the company are also increasing at a very good rate, so you can keep this company in your portfolio. Next company is Asian Paint. Invested amount is 15,000 rupees. Quantity is 6. Currently there is a profit of 2%. This company you can continue to hold in your portfolio. If you want, you can add more capital also to this share. This company you can easily hold for next 15-20 years. This can provide you decent returns. Next company is BAIL, which is Bharat Electronics. Number of quantity is 30. Invested amount is 3,000 and currently there is a loss of 11%. This again is a company from the PSU sector. I would have avoided this company. But since this company caters to the electronic equipment requirement for the defense services, there is a possibility that this company can do better in the future, because right now there is a lot of focus on the defense. So it completely depends on you. If you have the conviction, then hold it. Otherwise the amount is also very less. If you want, you can get out of this company. Next company is Birlasoft, quantity is 30, invested amount is 13,000. Currently there is a loss of 34%. This company belongs to the IT sector and this is a small company in the IT sector. If you want, you can continue also with this company, but since the nature of this company is like that it's a small cap company, it will go up also very fast and it can fall also very fast. And the fall percentage will also be very big for this company. So you can stay invested in this company and keep monitoring its quarterly result and give some time to the company. There is a possibility that this company can do well. Next company is Coal India, quantity is 100, invested amount is 15,000 and currently there is a profit of 42%. I already mentioned this when I was discussing about Power Grid. This again is a PSU, I would have avoided this sector. Now I'm at the chart for Coal India and if I'll show you 1 year return, you'll see very good return of 36%, that's what you are getting. And if I look at 5-year return, you will see that people who invested in this company 5 years ago, and if I look at the maximum chart pattern, you will see that this chart pattern does not qualify. The first criteria itself it is not able to meet. So I would have without any doubt avoided this company. But you should do what you feel like and not what I'm saying. So do your research and then decide whether you want to stay with this company or if you want to book profit and invest in some other company. Next company is Kolpal, quantity is 2, invested amount is 3,200 and currently there is a loss of 11%. This company belongs to the FMCG sector and for the FMCG sector I've already given my opinion. This company in the FMCG sector is very slow. It will give you returns similar to FD. So you can decide for yourself if you want to stay with this company or if you want to invest in a company whose profit are increasing at a better rate than Kolpal and who's providing returns better than Kolpal. Next company is Union Bank and quantity is 100, invested amount is 4,000. You are getting a profit of 69%. This again is the same thing, it belongs to the PSU sector. PSU bank sector has given a very good run up recently, but this run up is not going to be consistent. Sooner or later you will see these banks falling again because whenever there is a scam news, you will always find PSU banks involved in it. So I generally avoid this. It is always better to stay invested with the private sector bank. You can consider SDFC, Kotak Bank and last ICICI Bank. But looking at the profit that SDFC Bank is producing, I don't think there is any need to go with any other bank apart from SDFC. But these are again my view. Please do your own research and then act accordingly. Next company is Wipro, invested amount is 65,000, quantity is 105 and currently there is a loss of 36%. This company is the Bhisham Pitama company of IT sector. It has become very old. It will give you very slow return. If this would have been my portfolio, I would have waited for this company to bounce back so that I could take my invested amount back and I would have invested in companies like TCS or Infosys. While creating a portfolio, the first preference should always be the market leader and then invest in any other company provided it is doing better than the market leader. Otherwise, there is no point in having multiple companies. You can just stay with the market leader. And this is what I would have done in this case. You already have TCS. I would have invested this amount in TCS instead of Wipro. But sorry, not this amount because this will then become more than 10% of your total size. I would have still kept it close to 10%. And I know a lot of people get attracted towards Wipro because of the stories we have and the share price also is less than TCS or Infosys. That is the reason a lot of retail investors get attracted towards Wipro. But the sad truth is that this company provided those kind of return when this company was very small. Plus it has diversified itself into various other things and currently TCS, Infosys, these kind of company are doing far better than Wipro. And that's why you'll see that the returns also that they are providing is far better than Wipro. So in share market, profit is the king. Whichever company is giving you better profit, more profit, ultimately you will see the share price of that company going up and the share price and the chart pattern will eventually reflect the profit growth. Next company you have is DS Bank and quantity is 355. Currently there is a profit of 21%. Again related to the bank, my opinion is still the same. I would have gone with either SDFC, Kotak or ICICI Bank. Currently this bank is giving you profit because you have invested at the right time. Nobody knows about the future of Yes Bank, how it's going to perform in the future, because for bank the most important thing is trust and this company has lost its trust. So I doubt whether it is going to become the Yes Bank that it was earlier. But you never know, things can change. I would have avoided this bank. There are better companies available in share market from which you can make more money. Next company is Coromandel and quantity is 2, invested amount is 1500. Currently there is a profit of 7%. This company belongs to the fertilizer sector and this is the leader in the fertilizer sector. The profit of the company are increasing at a very healthy rate, plus the sales also is increasing at a very good rate. In the past, this company has not provided very good returns, but I think in the future it can deliver good returns to its shareholder. So if you want and if you have conviction on this company, then only stay with this company. Otherwise, you just have 2 stocks for this company. If you do not have conviction, then just sell the company and invest in a company where you have more conviction. But in case you have conviction on the company's business, then invest a good portion of your capital, so that when you get returns, at least those returns will have some value. Next company is Divi's Lab, invested amount is 17,000 and quantity is 5. Currently there is a loss of 5%. This company you can hold. This company is the leader in the pharmaceutical industry. It produces APIs, which are active pharmaceutical ingredients. Currently, this company is in a downtrend, so it all depends on conviction. If you have conviction, then do invest in this company when it is going down. But in case you do not have conviction and your conviction is shaking right now because of the results that this company is providing, then you can just hold whatever you have in your portfolio and do not do buy on dips. But this is a good company. You should give minimum 5 years to this company, and in the period of 5 years, I think this company is going to bounce back and deliver very good returns. But it all comes down to one thing, which is conviction. Next company is HDFC Bank. Invested amount is 18,000, quantity is 14, and currently there is a profit of 20%. I don't have to say anything about this. This is a fabulous bank, number one private bank in India. You can definitely stay invested. If you want, you can also increase the holdings in this bank. Next company is HDFC Life. Invested amount is 3,900, quantity is 7. Currently there is a profit of 3%. This again is from the insurance sector, which has a very good future, so you can continue with this company. Next company is Hindustan Unilever. You have 20 quantities and invested amount is 40,000. Currently there is a profit of 29%. So you have invested in this company at a good price. You can stay invested in this company, and the allocation percentage is also good, so you can continue with this company. Next company is ICICI Bank. Quantity is 19, invested amount is 14,000, and currently you are getting a profit of 8%. This again is a good bank. You can continue. So on the first question that you had, I've already given my opinion on all the shares, so you can also do your own research and then take action accordingly. Now coming to the second question, which was that how many companies you should have in your portfolio. So see, there is no hard and fast rule about the number of companies that you should have in your portfolio. But what I feel is that 15 companies are enough to give you diversification benefit, plus to reduce your risk as well. No matter how big is your portfolio, 15 companies can give you good diversification. But if you want, you can also increase your size from 15 to 20 or to 25, but 25 should be maximum, because after that tracking those companies will become a pain for you. And also you will get very confused whenever there is an opportunity in the market. You will get confused that in which share you should increase your holding. So ideal is 15 according to me, but you can increase if you are able to do the tracking of those companies. But one thing also remember, the more companies that you have in your portfolio, no doubt the diversification benefit you will get, the risk will come down, but the returns will also come down. Now coming to your specific portfolio, which is currently the size of 4.5 lakh. For a portfolio of this size, I think you should have maximum 10 companies. If you can keep it below 10, that will also be great, but 5 to 10 companies should be enough, because unless you have a good capital size, the returns will also not look very good. For example, in this case, you can see Union Bank, the returns are 70%, but the allocation was just 4,000 rupees. So it does not make much of a difference. 3,000 rupees will not have any impact on your portfolio size. And whatever companies that you're selecting, for example, if you're selecting 10 companies or 9 companies or 15 companies, those companies should be the top 15 companies as per you. Those companies should be the companies where you have maximum conviction, where you have done all the study, all the research, and those companies should be the companies where you are ready to invest whenever those companies go down by 20, 30, 40, 50% also. If you are going to get scared when those companies fall by around 40, 50% without having any internal problem, then your conviction is not 100%. So think about the companies in detail before you invest in those companies. Do good research, and if you want, you can first try to make a portfolio for yourself on a piece of paper, and then decide the allocation percentage, and then take action in the app. Now coming to the third part, which was on which company you should book losses. I've already given my opinion on the shares, but the final call should be yours, whether you want to book losses on those companies or not. But let me tell you one thing, booking losses is a very, very important thing in your investing journey. You should not be scared of booking losses from a company on which you don't have conviction, from a company on which you have doubt. You can follow the same thing which I said. Whenever in doubt, get out. In the initial phase of your stock market journey, you are bound to make mistake. You are bound to make losses also. That is completely fine. As and when you keep increasing your knowledge about share market, as and when you keep increasing on how to research a company, how to select the good companies, then this problem will also go away, because then in those cases you will hardly think about booking losses. Even I book losses, but I book losses when there is a problem with company's management, because whenever there is an internal problem in a company, it could be because of any fraud, it could be because of the management problem. Then if you'll not sell your share and get out of that company, then somebody else will sell it at a much lower rate and your share will keep on falling. So follow the simple strategy. If you have lost conviction on the share, book losses, get out of the company, and invest in a good company, but do your thorough research before investing in any other company. So that's all in this video. If you liked the video, please hit the like button. This will motivate me to make more videos. And also, if you have any suggestion or if you want me to make a video on any specific topic, you can mention it in the comment section. And if you are new to this channel, do hit the subscribe button so that you can get regular update whenever there is a video uploaded. So bye for now. We'll meet in the next video with some new information. Thank you.